So the FOMC statement and also the SCP came out last night. Okay, and of course, if you have already read the headlines, which I'm pretty sure you have seen on either on the Facebook, on Instagram, on either Wall Street Journal, Bloomberg, CNBC, and whatnot, you would definitely have known that the Federal Reserve hiked the interest rate up by 75 basis points. So what does that actually mean for the market? Right. So first of all, for people who do not understand why the Federal Reserve are actually increasing the interest rate, is because by now we should have probably already know that we are in a hyperinflated economy. Inflation just reported at 8.6% year over year, according to the latest CPI data from last week. So of course, before the CPI actually came out, the last information that we have gotten from the Federal Reserve was that we are going to be getting 50 basis point increment for the next couple of meetings, expecting it to be another 50 basis point increment for the June meeting, which is what happened yesterday. And of course, with the 1% month-over-month increment in the CPI, which is the inflation data, basically annualized into 12% year-over-year inflation, that definitely sent a lot of scares and a lot of shock to the market, okay, which is why on Monday, basically everything was red. And of course, people started to price into the market that, a 75 basis point increment is definitely going to be needed. At the very least, 75 basis point increment. Okay, so the Fed's fund rate, previously they were actually projecting it to be, I think, 2.7%. Clearly, that's not the case anymore, because according to the new SCP, which is the Summary of Economic Projection, is now up to 3.4%. But honestly speaking, I feel that the Federal Reserve are still trying to coddle the market. Okay, because the situation is that we are definitely supposed to see the Fed's fund rate upwards of 4%. So now we have to actually go through how many more meetings we have in 2022. We have another July meeting, we have another September meeting, we have another November meeting, and we have a December meeting. So 4 more meetings at the moment. And right now our Fed's fund rate is at 175 basis points. And if we were to add 75 basis points for the next meeting, which, right now Jerome Powell is saying, chances are it's going to be 50 to 75 basis point increment. Okay, and then let's just say in September, okay, my base case scenario right here, September is going to be another 50 basis point increment. In November, it's going to be another 50 basis point increment. And in December, it's going to be another 50 basis point increment. So this is expecting an inflation plateau. We are going to be looking at 4% Fed's fund rate, which is already higher than whatever the Federal Reserve is projecting for the end of 2022. Which is why I said upwards of 4% at the very least. Because let's be honest here, if the next month's inflation data come in to be 0.8% month over month or 1% month over month again, then I'm pretty sure that we're going to be getting another 75 basis point increment in July. And there is a good chance that in September, we're going to be getting another 75 basis point increment. We need to get our Fed's fund rate upwards in order for us to tame inflation downwards. So the Federal Reserve needs to stop coddling the market, basically. Okay, and afterwards, Jerome Powell basically said that, in one of the Q&A, he basically said that we are not seeing a broad slowdown in the economy. False. It's clearly false, okay? Because same thing, looking at the employment numbers, the labor market is not as hot as it's supposed to be. Okay, retail sales literally at 8:30 p.m. yesterday, okay, it was reported saying that the retail sales were actually down. Consumer spending is down. Real estate demand is down. How is this not a broad slowdown? So, of course, I feel that Jerome Powell is definitely, okay, either Jerome Powell knows something that we all don't, okay, but, according to all the news articles that we have been seeing in the past quarter, I'm almost certain that some form of a slowdown is actually happening. And of course, we can see the labor market going to see some more pain in the future. So if you have not already seen the updated copy for the FOMC statement, you can see some of the corrections that was being made, and they actually canceled away that the labor market is going to be all right, which kind of just further proves the point that they think that the labor market is going to be in some pain in the future. And one of the funniest things that Jerome Powell actually said during the meeting was to all the young home buyers, saying that you need some form of a reset. Okay, AKA, he's trying to tell you guys to stop buying homes because mortgage prices are going insanely high. Mortgage rates are going up, interest rates are going up, demand for houses is just going whack. Okay? And basically, he's saying that, don't worry about it, mortgage rate will eventually come down. And also, inevitably, basically, he's telling you guys that all the young home buyers in the United States don't buy a home. There's never been a time where a Federal Reserve chairman told the younger generation of the United States to not buy houses, aka do not bet on the United States real estate market. That's never happened before. Okay, and also, lastly, he also said that Jerome Powell is not trying to induce a recession, verbatim according to Jerome Powell. Okay, so of course, by what he's saying over here, it means that he's not going to Paul Volcker us. And for people who are unaware of what Paul Volckering means, it means that back in the 1970s, where Paul Volcker was the Federal Reserve chairman, where he basically just increased the Fed's fund rate all the way up during a hyperinflated economy that basically just destroyed the whole entire market in order to bring inflation down. Okay, so of course, Jerome Powell didn't want to induce a recession. Okay, Jerome Powell don't want it. Joe Biden don't want it. Okay, we get it. It's their term. They don't want a recession to happen under their watch. Fair enough. But the thing is, if you do not go into a recession now to bring down inflation, this inflation is going to continue to snowball. And that's going to be the concern in the market. So, opinions. Let's get opinions out there. I don't want this to be such a long video. I want this to be a quick and simple video for you guys. The SEP, which is the summary of economic projection, is trash. I feel that there's too much coddling happening in the market. I feel that they're trying their best to not scare the market when they should just give us the hard truth. Okay, expecting unemployment to be relatively low when it's untrue. It's definitely untrue. I think unemployment is definitely going to be taking up, especially in 2022 and 2023. Expecting core inflation to be at 4.3% by 2022 is ridiculous. Okay, anything upwards of 5%, at the very least upwards of 5%. Okay, right now we are basically at 6% or so for core inflation. Okay, and I don't see us taking down to 4.3% by the end of 2022. Just insane. And of course, expecting the GDP change to be at 1.7%, aka an increase in GDP of 1.7% in 2022, instead of anything under 1%, is insanely ridiculous because that's basically just trying to coddle the market. You need to let the market know that you're going into a recession or you are already in the midst of a recession. I feel that the Feds are still failing to give us the full brunt of the pain. And I feel that the Federal Reserve needs to just do it. Okay, I'm not sure how are they going to do it. I think in the next CPI, if we were to get another 1%, there is a good chance that in July we might even get a full 100 basis point hike or even a 125 basis point hike in order for us to just push this inflation thing down. But yeah, anyway, those are the summary of what actually happened last night from 2 a.m. to 4 a.m. I'm glad I stayed up for it. I thought that it was very, very interesting. But anyway, that's all for the summary for the FOMC statement and also the SEP. Anyway, thank you guys so much for watching, and I'll see you guys in the next one.